Like I need that when we used to do the videos in the conference room. So, all right. Well, we might as well get started here. Okay. So tonight we're talking about the Corporate Transparency Act. Okay. Everyone's favorite thing. Okay. Quick introduction to me. You, of course, mostly know me. Okay. But I'm Paden Hanson. Okay. I'm named after the good guy in Silverado who shoots the bad sheriff in the end. I've been a practicing attorney since October of 2019, and in the last 4.5 years, I've helped hundreds of clients with their small business needs. And so I'm familiar with everything from, kind of the startup, I'm an Etsy shop, all the way to I want to get traded on NASDAQ. So I've kind of run the gambit in terms of business life cycle. Why are we here today? Not for a sales pitch, okay? If you've been to these Elysium community events, you know that. We're here to learn, understand, and apply, and help you, basically live your best life as part of the Elysium mission here. Specifically, what are we going to talk about? Okay, we're going to do a quick overview of the Corporate Transparency Act. We're going to learn who's required to make filings under the Corporate Transparency Act, who's exempt from filing, and what type of information actually has to be disclosed, what goes into that report. The bulk of the material that I'm going over today comes from the Small Entity Compliance Guide that got put out by the Department of Treasury. It's a great resource. We're going to cover the basics today. If you have specific questions, I'm certainly available, but this is a great place to go for some help. All right, so the Corporate Transparency Act, okay? Enacted January 1st, 2021, or rather, passed by Congress early January 2021, and it's an expansion of anti-money laundering laws, okay? So the idea here was government's trying to combat money laundering, terrorism, things like that. They had concerns that what people were doing was setting up fake companies basically to help them kind of hide what they were doing, okay? So they passed the Corporate Transparency Act to combat that. And kind of the gist of the Corporate Transparency Act is it requires most new businesses and well, really all businesses, okay, most small businesses, to file what's called a Beneficial Ownership Information Report with the Financial Crimes Enforcement Network of the Department of Treasury, okay? So those acronyms that we use, a BOI report, okay, to FinCEN, okay, but that's what we're talking about. The BOI report basically includes information about the owners of the business and the people who are filing to create the business. All right, so this is a really new development, okay? Just a few days ago, U.S. District Court in Alabama ruled the Corporate Transparency Act unconstitutional. Their ruling is very narrow. It only applies to the litigants involved in that lawsuit, but this was expected. We figured there would be challenges to this law. It's not a generally applicable ruling, meaning unless you are the litigants in this case, you still have to comply with the Corporate Transparency Act. So as practitioners, this doesn't really impact much, but it is kind of a glimpse into where we could potentially see this going in terms of appeals to the appellate courts and then potentially up to the Supreme Court to see if this is something that they deem unconstitutional. My 2 cents as a practicing attorney is I don't really buy the district court's argument that it's unconstitutional. I think you can get to constitutionality pretty easily through the Commerce Clause of the Constitution. So I would be surprised if at the appellate level the district court got upheld. So. All right, so does my company have to file this beneficial ownership report? Not all companies are required, but most are, okay? All reporting companies are required. So what's a reporting company? We have domestic reporting companies, okay, US-based companies. That includes corporations, limited liability companies, and any other type of business association or company that files a formation document with the state, okay? So who doesn't? Sole proprietorships, unorganized partnerships. It's kind of a short list, okay? Basically everyone that forms an entity has to do this. Foreign reporting companies are basically that same structure but filed within another country but registered to do business in the US, okay? So the vast majority of companies. There are some exemptions. Slide got a little funky there, okay? You can see there's kind of a long list. There's 22 exemptions. Most of these aren't generally applicable, okay? Most companies are not reporting with the SEC, okay? Most companies are not banks. Most companies are not investment advisors, insurance companies, okay? And so again, most companies are gonna have to comply. The basic idea of these exemptions is these types of companies are already reporting this information somewhere else, okay? If you're an SEC reporting company, for example, you file what are called 10Ks, 10Qs, and 8Ks, where you provide this information kind of on an annual basis. And so FinCEN has basically said, you already file it, you don't need to file it somewhere else, okay? I'd say never assume you're exempt, and the reason for that is if you're wrong, the penalties can be pretty darn steep, okay? $500 a day for not complying, and up to 2 years in prison. If you're a principal of the company, like an officer, director, CEO, CFO, you can also get personal liability for not, helping your company comply. Let's see here. Two types. So I have a company. I've decided I have to report. What information do I have to report? Okay, basically two types of information: who the beneficial owners are, and we'll talk about what that is, and who the company applicants are. The company applicant requirement only applies to companies that have been formed since January 1st of this year, okay? So old companies don't have to comply with that, and that'll make sense in a little bit. It might be hard to track down who formed a company that was formed in 1832 kind of a thing, but we'll take a look at that in a second. So who's a beneficial owner? A beneficial owner is anyone who exercises substantial control over a company, or someone who has at least a 25% owner interest, okay? That 25%, we just kind of assume if you've got a quarter of the company that you own, you can substantially influence the company, okay? You can be either a substantial control person, or you can have that ownership interest kind of piece. The Department of Treasury doesn't care. They just ask who's the person that needs to report. They don't ask, well, under what kind of guideline here. And so you could be either or both. You just need to make sure that the company is reporting that information. One thing that I haven't done a great job in this presentation is this is a company requirement, okay? So as an individual, unless you're someone who is involved with kind of the decision-making of the company, you don't have an individual obligation to file. It's the company that has the obligation to make these filings. So what's substantial control, okay? We have some kind of big categories here, okay? An individual who's a senior officer, again, that's your CEO, CFO, COO type of roles, okay? Anyone who has the authority to appoint or remove members of the board of directors. We see that a lot more in corporations where you might have some preferred stock that has the option to elect a certain number of directors. You're an important decision maker, okay? Maybe you're kind of the inventor of whatever the company makes, and we kind of rely on you to guide what happens in terms of manufacturing decisions and things like that. And so you could be required. You might be someone who has substantial control. And then we have kind of this catch-all thing, which is really like, a definition, we're going to define substantial control by saying substantial control, right? The individual has any other form of substantial control over the company, right? Okay. Not a lot of guidance there, okay? Basically, if it's someone who you feel like this is a really important person in this business, okay, without this person, we wouldn't be able to do what we need to do, they're likely someone who has substantial control. So then the other kind of prong on that, someone who has at least 25% interest in the company, okay? So what's an interest or what's, equity? That's stock, that's membership units in an LLC. In some cases, it can be convertible debt or other instruments that convert, stock options, warrants, things like that. Anything that smells like ownership would fall under this category. Okay, so who would qualify for an exemption, okay, as a beneficial owner? Okay, some of these make a lot of sense, okay. Minor children, okay, we're uncomfortable with the idea of disclosing a minor child who's an owner. Most minor children probably aren't substantial control type of people, okay, but they might have inherited their interest from, a parent's business kind of a thing. A nominee, intermediary, custodian, or agent. So an example of this would be, I have a client who's quite wealthy, and so when I meet with that client, I don't meet with the client, I meet with that client's people, right? Okay, I meet with their, kind of home office kind of a thing. Those are people who are making a lot of decisions and probably do have pretty significant control, but they're doing it on behalf of this other person, okay? So that's where we see attorney CPAs, other service providers. We might have a lot of control, but we don't have to file in that way. Employees, a future inheritor, okay? So you name someone in your will as the owner of your business, okay? That might give them some type of control, but that's not really what we're looking for here. Until that interest is solidified, right? They actually inherit it. There's no obligation to disclose, okay? And then creditors. Again, you made a significant loan, and so in theory, you can kind of sway the business because you have control over what happens, how that loan is called. That's not what we're looking for here.
I have a question for you.
Yes.
So we go back one slide. So if you own stock in a company, but you have your LLC own the stock in said company, how?
We're going to see through the company.
Okay, so anyone that owns that LLC that owns the stock would need to.
Yeah, and now you have 2 reports you have to file, right? Okay, you got to file the report for the LLC, and then you are a substantial control person through your ownership in this LLC of this other company. We see the same thing. There's a little bit of gray area right now in terms of, well, I don't own it, my trust does, okay? Same analysis, okay? Who are the trustees? Who are the people in charge of making decisions for the trust? They are the beneficial owners. They're going to exert the substantial control, okay? All right. So then the next thing, so we talked about beneficial owners, okay? They have to be disclosed, okay? The other kind of type of person who has to be disclosed would be the company applicant, okay? And we've got kind of 2 parts to that. We have the direct filer, okay? And I like to think of that as, that's the person who clicks submit, okay? So in my practice, okay, that's Allie, okay? She files my LLC documents, okay? So she clicks submit, so we have to disclose that she's the filer. Okay, and then there's the person who directs or controls the filing, okay? That's me. I'm the one that said, hey, Allie, click the button, okay, it looks good. And so my name is on all these filings as well. So for Paden, this is Paden, okay? Do I have to disclose my company applicants? Like I mentioned before, if the company was created before January 1st, 2024, we don't have to. Can't imagine. In the original rule, we did. It looked like we were going to have to go back and figure out who formed these companies since the beginning of time, right? And luckily the Department of Treasury said, yeah, that's not really going to work, is it? And they adjusted the rule so it's all new companies, companies created on or after January 1st, 2024.
I have a question about that.
Yes.
If this year we're moving from a sole proprietorship to a corp.
An LLC or corporation.
Does that count?
Yes, that's when you file that new business association, that's when you're going to get triggered. We'll talk about deadlines in a second, but essentially you're going to have 90 days to file. Okay. All right, so what kind of information should we start gathering? Okay, so I'm a company. I know I need to make this filing. What kind of information am I going to have to disclose? Okay. Full legal name of the company, any other names that the company does business under, right? Sometimes we call those DBAs, sometimes they're fictitious business names. Current US address, what jurisdiction you're in, okay? In the United States, that's the state that you're in, okay? And then we need your tax identification number, right? Okay. Sometimes we call it a TIN, sometimes we call it an EIN. It's the same thing, just your tax ID. Okay, so what information do we need to get from the beneficial owners, okay? Name, date of birth, address, a photo ID, okay? We like using driver's licenses because they have all the other information on them. And then an identifying document number, okay? Your driver's license number, your passport number, okay? It's really not terrible to gather the information, from our perspective or when we're doing these filings. If we know the name of the company and we have the driver's licenses of the different beneficial owners, we can get the filing done pretty easily. Company applicant information, you'll notice just the top line changed. It's the exact same information. Okay. When do I have to file the report? The reporting rule went into effect January 1st of this year. Okay. So if you're an existing company, okay, you were formed prior to January 1st, 2024, you have a full year to make the filing. Okay, your report is not due until December 31st, 2024. Now, don't wait, okay, because you're gonna get worried about this. You're gonna forget some of the information. You're gonna call me. You're gonna call someone else, and we're gonna say, I have 400 other of these I have to do because everyone's calling me right now, right? So take a look at it now, okay? If you have questions, now is a good time to ask questions when we're not so busy with these things. If you're a new company formed this year, you've got 90 days to file. That 90 days, that starts ticking away once you've received notification from the state that your organization has been approved, right? So if you're in Utah, go ahead.
Is like Utah State site telling people to do that? Is that happening now, or are they just hoping people know?
I haven't seen it. Since I don't use the online filing system, I haven't seen it. It wouldn't surprise me if they've got something there. In other states that I'd file online, there's Wyoming, for example, has a little thing that pops up that says, hey, FYI. So next time I have an urgent filing and I have to do it online in Utah, I'll check that.
Yeah, I'd be curious to see. I would hope
I feel like the states have been pretty good about trying to make their business websites dial you in on that requirement. Like I said, I know Wyoming's got a full tab about it. Nevada's got something. Delaware. When you make a filing in Delaware, you get a mailed copy of everything, and there's a little blurb about the Corporate Transparency Act on that. Companies formed after January 1st, 2025, okay, our 90-day window goes to 30 days. Okay, basically what FinCEN has said is, you have this year to learn about this. Okay, we're going to do outreach. We're going to let you know. Next year, 30 days to make the filing. Okay. So how do I make the filing? This is a snapshot, okay, from FinCEN's website, okay. And so you can see there's the URL there. And all you do is click on Get Started, and it's very intuitive, okay. Takes probably 10-15 minutes to make the filing at most. My only complaint about the website is that it's hard to tab through. Other than that, I've been very pleasantly surprised that the government's website works quite well. Okay. What if there are changes, okay? So you have to make an initial filing, okay? And then anytime information changes, you gotta update it, okay? Your business address changes, you gotta go update, okay? If you are a beneficial owner, okay, you get a new driver's license, okay, you gotta update it, okay? So there is a bit of a burden in terms of updating, okay? And you still have those same penalties and things like that if you're not updating. And so it's important to just kind of build that into your workflow and make sure that as you're doing those updates that you're staying up on your Corporate Transparency Act stuff as well. All right, so that was a bit of information, okay? So here are the bullet points, okay? I do the too long, you know, didn't want to read it kind of a thing, right? Okay. Corporate Transparency Act is a law meant to combat money laundering, anti-terrorism, things like that. It requires virtually all businesses in the United States to make a beneficial ownership information report. That report is due if it's a new business within 90 days of the formation. If it's an existing company, it's got to get done this year. What type of information do you have to report? Company name, address, tax ID, things like that. Beneficial owners, name, address, birthday, and then upload a photo document, okay? What happens if I don't do this? $500 per day penalty, up to 2 years in prison, okay? So try to avoid that, right? If you have more questions or if you want to get in touch with me about either helping you out with, you know, the Corporate Transparency Act, here's my contact information. Be happy to chat with you about the CTA or anything else business related. We've got some upcoming classes here, okay? We've got Lisa Ward talking about home insurance hunting. Let's see, is that next week? And then we've got Brady with his Junior Money Matters class the week after, so exciting stuff. All right. Does anyone have any questions? get through these slides faster and faster every time I do this.
I have a question.
Yes.
What if your license doesn't have your current address on it?
Then you'll just type that information in.
Could you type it in anyways?
Yeah.
Okay.
Yeah. If you're like a regular filer, you know, for those of us who do these filings, right, you can get your FinCEN ID and then just type in your FinCEN ID and it populates all that and you don't have to worry about it. But yeah, the photo ID doesn't need to match those details. The only thing on the photo ID, if your photo ID number changes, right, if your driver's license number changes, you need to update that. But that's it.
Is there a cost for that?
No. So the FinCEN website, totally free. Yeah, no cost to.
So if you go in and enter that information, you're compliant.
Right.
Okay.
Go in, you know, click through it, click submit, and you'll get a little message that says, confirmed, we've received your FinCEN report or your BOI report. You know, you can print it out, keep it for your records.
What are some of the key reasons you would want like an attorney to do this or look it over for you versus doing it on your own?
I think that concept of beneficial ownership is really intuitive to business attorneys, especially like I do a lot of SEC stuff where beneficial ownership is really critical in how you're disclosing things. And so that concept is very intuitive to me, where it might not be so much, you know, someone might come to me and say, well, I'm the owner, but like I'm married. Do I need to disclose my spouse? Okay. And I've read the regs, I've looked at the interpretations, and I know in this case the answer to that is no. If you're the listed business owner, then only you need to file, okay? But there's little questions like that pop up where, again, if you get it wrong, the penalties are steep. And so, yeah, that's why we're here to guide.
And then I'm just still, I guess, confused. So if you had a business created prior to January 2024, here it says you have a year.
You have 1 year to file your initial beneficial ownership report before 2024.
Okay.
Yeah.
And I thought before, and I probably misheard, I was thinking that it was, if it was before 2024, you didn't have to do this.
No, it's all companies have to do it.
Oh,
Yeah.
It's just one.
Yep.
You were just saying before 2024, you don't have to submit the.
You don't have to,
applicants
yes.
or something like that?
Yeah. So again, two types of information that have to get submitted, right? In terms of the individuals, right? The company submits its information and it also discloses information about individuals, okay? So the company's stuff, name of the company, address, all that kind of stuff, tax ID. And then it says, these are my beneficial owners and these are my company applicants, okay? If you existed before January 1st, 2024, you don't have to disclose the company applicants, okay? Again, the idea is it's going to be way too hard to remember the name of the attorney who filed this 10 years ago. I have to get their photo ID. They're dead, you know. It's an impossible requirement, right? Okay.
What's a company applicant?
So the company applicant get there in a second here, okay? Either the direct filer, that's Allie, right? She clicks submit, okay? The person who directs or controls the filing, that's Paden, because I say Allie clicks submit, okay? So it's the person who actually does the action to form the company, yeah.
So if it's you submitting it on your own, it would be me and also me?
Yes, you're only going to disclose yourself once. Every company will have a direct filer. Not every company will have someone who directs or controls the filing. Other questions?
Great job, Paden.
All right, thanks guys.